Traders, welcome back to another price action education trading lesson. And today we had a very good price action to trade, and this is going to be a great learning experience for you to understand how market moves and how to follow the pure price action without any indicators. Now today is going to be a great day to go through the chart because you'll be able to see how price action moves, what are the key entry points, and what are the high probability setups. Now, as a price action trader, you are only relying on the candlesticks as they are printing on the chart. You can see that I have one indicator on my chart, is the 21 bar exponential moving average, but I use it as a supportive indicator only. I'm basically reading the pure price action, and what you will see here now today, you can use it in any market and any time frame. Today I traded the S&P 500 mini futures, and the time frame is 2000 tick chart, which is very similar to 1 minute chart. If you plot 1 minute chart, you'll see that it looks very similar to 2000 tick chart. Now, when I'm analyzing a structure like this, you can see this is the structure I would see a couple minutes after market opened, the regular US stock market open. And the structure right now is clearly a trend range because we have a move up, move down, move up, not that strong uptrend, not that strong downtrend. So fairly indecisive. Notice I'm drawing the shortened channels because I want to follow the trend line rule, which says after there's a break outside the channel, we expect for prices to retest new extreme. For this reason, I have the new high, new low, a new high marked on the chart because this is how I'm focusing on the price action. And every single time there's a new low here, I expect reversal, new high, I expect a little bit push down. So now that I'm trading a trend range and I'm following this indecisive structure, because you can see prices are quite stacked next to each other, I have to analyze the health of a trend range. Let's see what the market will do. Okay, I can see that we are pushing above EMA. EMA is getting in one of these bars, which is getting very congested. And once I see structure that is congested like this, very cramped up together without clear bias, I don't want to touch it. So when I'm watching this and trading this, I'm just laid back, waiting for more information. There is never a wrong time when you're a trader to be waiting for more information from the market, especially when it is unclear like this. You cannot get flustered, you cannot get emotional. The day is just starting. You can see market is working to the upside, and we have possibility for a failed breakout. Now, most breakouts of trend ranges will fail, but you have to ask yourself a question: what is the imbalance in this trend range? Is this trend range healthy, or is there some stronger bias? And we can see clearly that there is a bullish imbalance because prices try to go lower past the midline of the trend range so many times, and they failed so many times. And even you can see here, one bounce here, second bounce, third bounce, and you're pushing back above EMA. So there is a clear bullish bias in this trend range. This is what we call bullish imbalance. This means I don't want to be fading the breakout. And in fact, I can even draw shortened channel like this because we had kind of like a multiple matching lows. I can draw a channel like this, but this feels too wide. It feels like prices will never go here. Okay, we can see the prices are breaking higher. Okay, so I can see that we keep pushing higher, and now I have to reanalyze again. And in fact, this is now market giving me more information. And once again, I'm solely going to be relying on the candlesticks. I don't need any momentum indicator, no Bollinger Bands, none of that stuff. In fact, if you're trading Bollinger Bands, you're probably selling here thinking it's overbought. You're getting stopped up because market keep going against you because the trend is right now up. You can see EMA pointing up. I can see strong bullish spike. So at this point on what I'm expecting, since I'm trading quite a decent uptrend right now, we never came back into a trend range. I'm looking for a possible bigger channel because I expect at this point on, this is going to be a most likely some bigger channel. So the first option I draw was something like this. Now you're always going to locate your bigger channels, main channels for the first couple of swings. So you can see I'm using these couple of swings at the bottom. They're indicating to me some geometric formation, which is what I want to see. And it kind of fits well at the top. Now you don't have to be perfect. The idea here is to be close, and your main goal is to make sure you know where the market is heading and what most likely the pattern is. Now you will get more price action as the day goes on, and you will always tweak the trend line. But you can see it explains things because we have first leg down, pull back, second leg down. This is how market likes to move in pairs of twos. There are two-legged moves all over the chart because this is how market likes to move. It reflects human psychology. So we have a two-legged pullback. You can see high lows being formed, which is indicating to me a possible channel. So this is what I'm focusing on. All right, so we can see that the prices are correcting. So what am I going to do now? I know that the structure is bullish trend. I got my shortened key entry point, which right now has a break. So this channel needs new high. If I'm not sure about the main channel, I'm not sure about this. This channel is for sure confirmed because this is just a sketch. Oops, this is just a sketch, a possible option for some bigger channel. So you can either play the bigger channel, but it's not fully confirmed, or you can just focus on this momentum, this shortened channel. So now that I know that I'm trading a bullish trend, I cannot just buy randomly. I want to take a high probability setup, which is going to be a setup, specific setup to two-legged pullback when the correction phase will end. Because when you're trading a trend, there is a push phase that is with the direction of a trend. There's a correction phase and another push phase. So you can see correction phase will be over and you'll be able to identify that the correction phase ended after there's a two-legged pullback with the break and new low for the downtrend. So I'm not only looking for channels for the main pattern, for the main bias, but also for the against the trend, for the counter trend moves, because these counter trend moves, these corrections also have small channels with them. So I can see micro double top resets the count. So I have to reset the count because from this high, I'm going to count for longs. Remember, I'm looking for two-legged pullback, second entry long, second attempt to go long. So what I'm going to do, I'm going to redraw my tight channel. You can see nice bearish channel working to the downside. Double top resets the count, so you have a new high. And pars are working lower and we have a first entry long. Why this is a first entry long? Because now that we are working lower, I'm observing if we get a trigger above either one of these bars, and the first bar we triggered above from my count reset was this bar right here. So remember, you're counting here, you're observing if we get a break here, no break here, and we got a break above this bearish bar. So technical first entry long triggered once we triggered above this bearish bar. But I cannot go long just yet. The downtrend is in play and it's just a first entry long. And notice what happened. There was a little close outside, new extreme was formed, and instant reversal on just one bar. So on this one bar, 3 instances in the market happened. Close outside of the downtrend, quick little new extreme, reversal back above the EMA, and this right here is the second entry long. It is micro level, but the signal bar is bullish and is closing above EMA, which is important for me to see the momentum. So a new high, first entry long, pullback, second entry long. So this is exactly the kind of setup I'm looking for. This is indicating that the correction phase may end because we are at the key entry point. I'm interested in high probability two-legged pullback if it forms at the key entry point, which is either trend line or the exponential moving average. And you can see second entry long, gray signal bar, and the first high probability setup for the day. Notice this channel after a break reached new extreme, and prices are right now correcting lower. So when I was watching this second leg is much longer than the first one. So what I did, I drew my channel for the second leg. You can draw the channel for the first leg as a break and a new extreme, but generally once the second leg is 3 times larger than the first micro leg, there is most likely a safer option for you to follow the price action, and that is to draw a brand new downtrend for this second leg because it is much larger and stronger than the initial move. And notice we have a new high, first entry long, second entry long, but we're below EMA horrible bar. And now we have high low. This high low is confirming the second entry long, but the high low is horrible bar, below EMA, and it keeps working higher and it keeps working higher. All right, so this is indicating to me right now that the structure is more bullish than I expected. Because once I'm watching such a big move down, I expect that we may have at least new extreme. So the kind of setup I was watching here for was a failed second entry short. Because not only I'm counting from highs looking for second entry long, I'm also counting from the lows because you have a pullback down, and after every pullback, I reset the count. So after this low, I'm counting for second entry short to fail because everybody's going to go short on a second entry short against the main trend, which is bullish, is most likely going to get trapped. And I want to take advantage of all the sellers trying to pick counter trend entries. Remember, I'm trading a decent uptrend at this point on. So I'm only looking to buy at the key entry point, either at the EMA or at the trend line, or I'm looking for second entry shorts to fail, which never form. You only get sketchy high low. Okay. We have second entry long, but it's far away from EMA. I'm not interested. So I'm just watching and waiting some deeper pullback. At this point, I need some deeper pullback. We're not even making it to the EMA. And we have overshoot already. And we have another overshoot and another overshoot. So now that I'm watching this, something is not adding up. My initial channel, which looked pretty well, is not getting confirmed here at all. In fact, we are getting further and further away from this channel, which means this channel is probably not the best option because we're not even making it to the midline consistently. We're really getting further away. So this is indicating to me that the uptrend is probably stronger, and I'm just trying to look for better alternatives. So I'm going to delete this, and I can still use these lows right here. This is where the bullish imbalance started. So I was just looking for some better channel, and eventually you can see if you connect the beginning here with this second swing, the major one, we have a solid option channel like this, which looks kind of like a spike, two-legged pullback, and a brand new channel starting. So this is how I'm observing the price action, and let's see if it gets confirmed and how the price action will fit. And you can see, okay, this is fitting pretty well because we keep pushing higher, EMA is pointing up, and this channel is a little bit more tight and it's a little bit more healthy. So I'm always just trying to find the proper channel. You may not find it at the very first glance. Sometimes you may, sometimes you may not. That's not important. Important thing is you're close and you know where the market is heading. So you're looking for the right pattern. You can see even this high low after the fact looks much better because it is bouncing off the trend line. This is the reason why there was no additional push to a new low, and just this simple high low worked, but it's very hard to find in real time, remember. And notice what we have. We have sideways structure, so which means I need to identify small little consolidation, and now we have little break lower. Now once you see this big bearish bar, are you concerned about potential bearish momentum? Not really. This is the type of setup that lures beginner traders in and a lot of content traders because they see this big bearish bar and they are selling at the very bottom. But this small little area is congestion, and the same rules for trading range apply, which means most breakouts out of the trading range will fail. And this congestion is a small version of a trading range. Notice 10 bars stacked right next to each other. By the way, you have a new high, first entry long, second entry long, but you're not interested because it is so far away from EMA. So this right here is a failed breakout, high probability setup. But notice the single bar. By the way, when I was watching this live, I was still playing a little bit wide the channel. I didn't have it adjusted perfectly. I adjusted just after this move we're gonna have. So when I'm watching this live, I'm not having this perfect channel just yet. But this is a failed breakout. The single bar is iffy, however. The single bar is great. Can we get a high low? Once you see a bad signal bar, you're expecting high low confirmation setup of a failed breakout, and we never get it. But this is right now confirming the strong uptrend and that this is the proper key entry point. After this move right here, this channel is the right channel to follow and the proper key entry point. You can see there's always a reason to where the price action is going. And you can see this is a failed breakout, another high probability setup. In addition to like a pullback, high low, because you have a congestion and you want to fade the breakout because all content traders are selling and you want to trade it against the breakout direction because the main trend is up. So all of these early sellers are going to get trapped because the trend is up. So failed breakout at the key entry point will be an actually decent setup if you have the trend line at the time. If you have the trend line here, you can go long here as a high probability setup because you're having the key entry point as a confirmation. You can see, look how nicely prices are working higher. So you have to right now analyze the trend, and this is a clearly very strong uptrend. So you're only thinking about buying. You're not even thinking about market is overdue for reversal. Look how strong these bearish bars look. Let me just get a quick pullback to the EMA. Don't even think about it. You may get stopped out. You can see what will happen if you get stopped out. Don't even try. You're gonna make more money if you just stick with the direction of the main trend. All right, we're pushing lower. We have a new high, first entry long. So you're already thinking, you're already preparing your orders to anticipate second entry long if it forms perfectly. And notice what we have. New high, first entry long, pullback, second entry long. Now this second entry long is quite big. The bar is quite big. It's engulfing a lot of earlier bars, which is indication momentum. And it is at the key entry point. It is at the exponential moving average. So this is a high probability setup, an area on a chart where you want to enter. It is a little bit big, so you want to may consider limit order, and you would have gotten left behind if you use limit order and if you play a little bit more careful. But it is once again another two-legged pullback right at the key entry point, and the trend is up. So you're just really focusing on buying, because when trend is strong like this, the setups may look a little bit sketchy and you may not get the perfect setup. You just have to force yourself to buy something. Okay, we're breaking lower. Notice once again, I'm going to redraw the wider channel now, because once this second leg is so much larger than the first leg, generally there's a brand new kind of like a shortened channel working. You have a break. So what are you expecting at this point on? Zoom back, remind yourself main daily bias. Main daily bias is clearly very strong bullish uptrend. And once again, you don't need any indicator, none of this stuff. Everything you can gather from just following pure price action, learning how these candles print, where they are turning, when the correction phase is ending, and following the price action rules. Which one of the rules right now is a trend line rule, which says after break, we expect for prices to create new extremes. So at this point on, only thing you're expecting is just to time it properly to get a setup to get a new extreme. This is what you're thinking. You expect a new high at this point on. Clear uptrend, no conflicting beliefs, you expect new high. So the best way to do it is just to wait for the correction to get a new low first to be safe. If you don't have a new low and you're pushing above EMA, failed second entry short is safe. Okay, high low would not be safe because you don't have a new low. And we reach new extreme. Okay, so I'm going to write new extreme. New low. So at this point on, I want to see push above EMA and a failed second entry short. Okay, notice we have a possible higher low, but it's a doji below EMA, and I don't really want to take high low just yet. I really want to see a failed second entry short, because this is technically not like a second entry long, although we can new high. No, we have a first entry long, second entry long, third entry long, so it feels a little bit stronger correction. Either way, it closed below EMA, you cannot take it. Had it close above, you may consider this. You're expecting failed second entry short, like we said, and now we have failed second entry short above EMA. So this right here is a 2 attempts to sell from this low, because this is the lowest low of this push down. So we have a first attempt to sell because we broke below this bar, pull back, second attempt to sell, we broke below this bar. All right, so second entry short, failure. You're above EMA. You expect new high, just like we said. The bias is bullish. Is this a high probability setup? Well, it is, but it's a little bit riskier. Why? Because notice the small little congestion. We have 3, 4, 5 bars stacked right next to each other. A little bit stimmy. So you have to be willing to take a risk. Trading is about probabilities. Nothing is 100%, and you never can avoid losing trades. But you just have to accept the fact that you're taking a little bit risk here. But it's about calculating risk, because downtrend played with the break new low, you expect new high. So chances are high you're going to make new high. It just depends how risk adverse you are. So this is a decent failed second entry short. Me personally, I didn't take it due to the congestion. But you can see once the structure is strong trend, even the sketchy setups tend to work. And this is unfortunately one of the characteristics of a strong trend, that the setups with the trend are sketchy. And it makes you doubt the setup because they're not looking that great. They're not forming that great. While the counter-trend setups, they look perfectly. Strong signal bars, momentum. That's by design. So you kind of have to force yourself to be pulling trigger even on these sketchy setups. If you just fit the rules, you have to trust the price action rule. And notice what you have. You have a little breakout pullback out of the string range, because most breakout string ranges will fail. But you don't want to fade it against the main trend. You only want to fade it if you would broken below, but you're broken above. So you're not interested in selling. In fact, the key entry point is holding again, and this is a high-low confirmation setup, decent high probability setup as well. And notice you would have barely gotten out for a scalp. It worked for 10 tick scalp. You're interested in 8. So barely got out for a scalp, and market eventually continued working lower. So you can see even the initial high low would have worked. Okay, so now that this is happening, once again, zoom back. Are you concerned about this push down? Not really. Because if you're going to take a step back and zoom out, you can see that visually, this looks like a first leg down, pull back, second leg down. And market likes to move in pairs of twos. First leg at correction, pull back, second leg at correction. So only thing right now that you're thinking is, in fact, this is solidifying your initial analysis, that the downtrend truly played out. Since this first downtrend had a break new low, definitely now the correction played out. There is no case to be made for bears. You cannot draw a downtrend like this. This is too wide, too flat, and too much of a counter trend wide downtrend. Remember, you're drawing tight channels for the counter trend setups. Okay, you have a new low. I'm gonna keep it so it's easier to see. You have a new low, first entry short. You're pushing above EMA. So what you're expecting, you expect new high. You're expecting the same thing as you expected here. Second entry short failure. And you have it right here. New low, first entry short, pull back, second entry short failure. Great signal bar, high probability setup, above EMA, but it never got triggered above. So unfortunately, there is no way for you to enter. You would have had to enter engulfing, which means you get a tick below, reversal up, and you would enter above this bar. But since it's below EMA, engulfing feels a little bit too aggressive. But your idea here to go long is correct. Then you have high-low confirmation setup with a little bit sketchy signal bar. Look at the signal bar for the high-low. You know, all of these setups are, notice it is almost repeat pattern of this. You got to fill second entry short, and this time it is not that congested. So advanced trader can even go long here because the stim is quite nice at the bottom. And the more that I'm looking at it, I'm probably going to have to mark it. I didn't like how neutral-ish it looked. A little bit of a bearish. Had it close more bullish. Easy confirmation of the filled second entry short. Feels a bit more aggressive like this. Okay, you're going sideways. Notice you're pushing above EMA. This is confirming your analysis that this uptrend needs to get new high according to trendline rule. You have a new high, first entry long. And notice you have a second entry long. I'm going to redraw the downtrend. I have a break, new low, and reversal on one single bar. New high, first entry long, pull back, second entry long. And notice, great sign that the market is most likely going to reach new extreme. And what is the sign? Notice how EMA is holding every single time. Notice how these bodies of these candles are being supported by the exponential moving average. And this is the supportive indicator that we use. And you can see this is a clue that EMA keeps holding. Buyers are in the market and they do expect new extreme. And the downtrend has two legs down. So this is great high probability setup according to price action rules. You can see market kept pushing higher. So now that I expect new high, I can even draw potentially a wider uptrend like this because I expect new extreme. Remember, I'm not concerned about the fact you have a new high. Are you too concerned? Well, not really, because uptrend is so strong, you really expect new high. And since the EMA is holding here, this is a good sign that you're going to keep pushing higher. We have another two-legged pullback, second entry long, but you're so far away from EMA, I can't really take it. Would have preferred something to confirm the EMA. And we're not really getting any two-legged pullback. And now we just received new high for the uptrend on the left. But this channel is still strong and still going higher, so I can't really argue with it until we are pushing so far down like this. Okay. You can't really take any short because everything is far away from EMA and you are not sure if you're going to reverse because this channel was strong. But you can see now that the initial uptrend just had a two-legged pullback, break the new extreme. So reversal makes sense. So what I'm going to do, identify larger downtrend because we just reached new high according to trendline rule. Reversing down. Can we get a high probability setup to sell? Not really. We can't get nothing at the EMA. And you just have to watch it. There is no way for you to just sell everything, just the first entry short, first entry short. Okay, we're breaking the channel. We expect new extreme. You have a new low, first entry short, second entry short didn't trigger. So second entry short didn't trigger. EMA is flattening and you're starting to be too congested. Notice more congestion, more congestion. Here's the setup. I cannot take complete congestion indecision. You can get chopped. Even though it worked for a scalp, not interested. More congestion, just I cannot touch this. The market is just pushing higher, creating the second leg for this initial leg. And pretty much now we're getting too close to the market close. Yeah, as you can see, phenomenal price action day. Looking back in hindsight, You could have been really aggressive, which is hard to do in real time. Almost, in fact, I think every good high probability setup, which means every variation of a second entry long, high low, or full second entry short just worked. You could have bought pretty much any sketchy setup, notice second entry long here, even below EMA here, even high low worked, fell breakout worked, this second entry long worked, even this high low below EMA worked. All of these setups are working, all of these setups here, and even these setups that are not perfectly touching the EMA. So during this uptrend, almost any decent high probability setup works. This goes to show that these strong trends may shake you up a little bit because they may not offer a great signal bar, but just goes to show you great price action. You can see textbook, uptrend is confirmed, larger two-legged pullback, and notice this area, when you have two legs down and you have a failed second entry short, the same thing I expected Friday, our last video. You can see this is why price action rules work so great. And this is why the market repeats over and over again. We had an uptrend working to the upside, two-legged pullback down, and we expected it fell second entry short to reach new extreme. So the same two-legged pullback, just like we had today, same two-legged pullback, just like we had today. So great price action. We ended up having reversal, and the market consolidated a little bit around the close. Also, when I was analyzing today which channel I'm going to use, I took a look at 10,000 tick chart. When I saw clear spike, two-legged pullback, little consolidation, and a slimmer channel working to the upside. So this gave me the idea that this might be the proper channel. You can see second entry long here, larger second entry long confirmed by high low, and a new extreme was formed. So even on a high time frame, price action rules apply. I hope you had a great trading day. I'm gonna wrap it up. I'm gonna see you guys next time. Good luck, everybody.